private banks also seeing quite a bit of traction. Mayuresh, Joshi is also with us. Mayuresh, good afternoon. The other pocket to talk about today has been metals. We have seen Tata Steel bounce back to 52-week high. Any thoughts here?
Afternoon, Anuj. Again, I think the results for a lot of metal companies were very encouraging this time around. And the large part of the metal rally has actually happened when they were underperformers in the last fiscal. But looking at numbers and the government initiatives that had taken place specifically for domestic operations, again, expectations are running high that these numbers will hold good on an EBITDA to ton basis, specifically for domestic operations. As the US markets improve, my entire sense is that the value-added products are going to take the upper hand for companies who are involved in these projects and products. So largely, again, I think if you look at Novelis, Hindalco's arm, the expectation there from management is that the auto revenue should contribute 25% over the next 2 years. That is a high margin accretive business for Novelis and on a consolidated basis for Hindalco as well. Similarly, I think on the domestic turf, the kind of acquisitions that they've done in terms of coal mines and reserves and accessibility to reserves to bauxite, again, that improves their visibility as far as the costs are concerned. And to that extent, I think the cost optimization starts playing out meaningfully on the balance sheet. Most of the smelters are working at full optimal capacity at this point of time. So it's going to be a story of operating leverage from here on in terms of how realizations come through at improved levels. With cost optimization coming through, I think the margins are protected to a certain extent. So I think it's going to be a demand-supply story henceforth. And as the capital cycle improves for Indian corporates over the next 2 to 3 cycles, as private capex starts coming in, and as the norms probably start improving in terms of the international standards as well, in terms of how recognition will take place in terms of demand-supply for the inventory on LME, I think these stocks probably are in a sweet spot. So yes, again, declines probably is the way I look at it. So Hindalco is something that I'll probably look at, but on declines.
Look at Hindalco on declines, all right. So these are the spaces that are really hotting up now. The metal space, the banking space, some of the smaller banks that is, and the infrastructure space also with names like Punj Lloyd, GMR Infra all up and about. We'll continue talking about these on the other side of the break, but it's Monday, so we'll get our colleague Nigel D'Souza to give us his weekly Mid-Cap Mania special this Monday afternoon. Stay with us.
The global market support which is benefiting India also is just the hope building out about some kind of US recovery from the new government policies there. Both in terms of the current data points holding up or showing up a more resilient economy, as well as hopes for recovery therein in the US with the new government coming in. India specifically, I think beyond the fundamentals, so on a fundamental aspect, the market rally is also being helped by the respite from some extreme pessimism around demonetization. In this quarter, obviously, we have seen a wide range of numbers. Most of these numbers are still much better than what markets feared, a part of the markets feared in December in terms of an extreme impact from demonetization. But still, the numbers, the range is wide. So I won't overinterpret it either way. So I'd rather wait for the March quarter to take a call. But our sense is if you look at the numbers, just to aggregate the numbers and what it means, so it's still, we are seeing estimates for Nifty, for example, for fiscal year 17, still at about 11-12% growth. So they have been cut almost 4% since demonetization. We will see more earnings cuts definitely.
Welcome back to the show, where the market is in fine fettle this afternoon at the high point, up a little less than 0.5%, continuing the uptrend that we saw from last week, and plenty of stocks really picking up pace at the moment. Sandeep Wagle joins in to give us some trading ideas for the day. Sandeep, what are you looking at in the last hour of trade?
Afternoon, I would go with a buy in a power grid, stop loss 204, target 213. A buy in a LIC housing finance, stop loss 554, target 575. And a buy in a Tata Steel, stop loss 477, target 495.
Okay, that's 3 buy calls at this point in time. Well, the market is quite okay actually. The mid-cap index, as we've been saying, has hit a new high, and if you look at the junior as well, that's also hit a new high. Some more names which are surging right now. REC is up close to about 4%, and we have Dish TV as well, which is now trading at the high point of the day. So a lot of these stocks are surging at this point in time. But let's discuss some more names and the kind of rally that we're seeing in stocks. Well, one more name before we go to our guest is Cadila Healthcare. That's seen some bit of profit taking in today's trade. Mr. Chan, we spoke about it in the morning, but at 416 on Havells, is the risk reward positive or favorable?
See, Anuj, if you need to understand the price behavior of both the stocks, Havells and Lloyd Electrical. Now, if the market is saying that this is negative for Lloyd Electrical, the stock is down by about 15%, then obviously it should be that it is seen a positive for Havells. But market is again taking that even for Havells this is negative. You cannot say that the deal, if the Lloyd has divested the stake at a very low price, and that is why the stock is having corrected by 15%, should give the better reflection into the share price of Havells. But it is not happening like that. And in fact, in the morning I have said that maybe for Havells market will be little uncomfortable because the blended margin, the overall margin of this air conditioning business or maybe the consumer durable business along with their existing product line will definitely fall. But eventually on the net basis for FY18 this will improve. So maybe the correction is seen lower in Havells, maybe because of the positive bias seen building up. But honestly, I don't understand the reason for a correction in the Lloyd Electrical. And in fact, as I said in the morning, that I will be keeping a positive stance on both the stocks, not from a day or from the near-term point of view, because once if the deal gets concluded by 31st March, as indicated by the Havells management, I think 1600 crore or 1550 crore coming into the company of Lloyd Electric and the entire business, wasting into the Havells will all be seen positive. So maybe this near-term aberrations will be seen, but I am keeping a positive stance on both the stocks from a medium-term point of view.
Okay, Prakash, today a lot of metal stocks have hit 52-week highs, whether it's JSPL, whether it's Vedanta, whether it's Tata Steel. So that's clearly been the space of the day. Forget about the trading day, but for slightly medium term, does it still make sense to buy into any of these names?
I would think so, yes, because the entire sector is looking good. Let's look at Vedanta. I think Vedanta also can climb to levels to 285, 300 zones. So it's a matter of time. It'll go there, stop below 264 and Vedanta should be fine. Even Grasim is looking good to me. So when I look at the entire metal space, yes, Sonia, it certainly looks good.
Okay. Just a couple of more names. Ponj Lloyd, in fact, is a stock which is now up 10%. GVK Par is up about 4%. So a lot of these stocks are seeing intraday rallies. And apart from that, Bajaj Hindustan is the other one where we have seen some rally. That stock is up about close to 1%. Mayuresh, I wanted your thoughts on TCS as we head closer to the buyback now. Last 30 minutes left for those who want to take positions ahead of buyback. What's your call on the TCS stock and also the IT sector?
Generally, I think Anuj, the IT sector is facing headwinds for the past few months. I think the earnings are not coming through. The digital transformation processes that have taken place over the last few quarters are taking a toll in terms of how the margins are panning out on the EBIT front. And third, I think the headwinds related to the H1B visa. So largely, again, I think if you account for all this, Q3, Q4, anywhere traditionally weak quarters, I think consumer discretionary spending is decided in Q4. What happens with the bill, I think largely now the companies are moving towards local hiring in the sense of probably beefing up in terms of if the bill does come through. I think they're actually having some resources on ground on that front. So I think again the IT sector is facing numerous headwinds which are probably overweighing the tailwinds that it probably has in terms of currency, and again that has to be looked into fact on how the cross currency headwinds and tailwinds move on a quarter-on-quarter basis. Having said that, my own sense is that the large cap IT names, the basket of those in a staggered manner over the next week is the best way of looking at it. As far as TCS's buyback is concerned, a lot of cash reserves on its books in excess of 40 to 43,000 crores. You're probably looking at some way of rewarding shareholders in that sense, either through a buyback or through a dividend payout. So I think shareholders were waiting for these announcements to probably come through. We'll know the exact quantum on how the buyback is going to get placed in today's board meeting. And again, I think the size of the overall issue on offer if it does come through. But again, I think leaving aside the buyback, I think the dynamics are pointing to greater stability going forward. The BFSI, specifically Diligenta, seems to have bottomed out. Retail, healthcare seemingly looking bottoming out as well. while India, LATAM probably facing headwinds at the current juncture, may continue to do so at least for a quarter or two. But I think strong order book, the utilization levels have improved, the attrition levels have come down, and though a new CEO has taken over, my own sense is that the market will give TCS its fair bit of valuations over the next 2 years because of the digital transformation that it has already embarked on. So largely again, I think the call is to buy a basket of large cap IT in a staggered way to probably reduce both the volatility and impact cost.
Okay, well, since it's Mondays and Mondays generally tend to drag on, we have tried to brighten up your Monday with our special Mid-Cap Mania with Nigel D'Souza. Nigel, what stock are you going to talk about today?
Well, you know, Sonia, I'm going to be telling you all about this newspaper. It's a Gujarati newspaper. I think I'll start reading it. No, that's not really what I'm going to do. Actually, I'm going to tell you about the entire newspaper space. That's a Gujarati newspaper space. There are three top players are there. There's Gujarat Samachar, there's Divya Bhaskar, and also there is Sandesh. And Sandesh is a listed company. It's very, very low volumes, but let me take you through some details with regard to the company. Now, in terms of their revenue, bulk of their revenue comes in from the print business. A very small segment comes in from the TV business. That's the TV advertising business. So it's at around 93 to around 94% comes in from the print business itself. If you take a look at the shareholding pattern, they are up there till the top. So close to around 75% of the stake is with the promoter. But just keep your eye out because the remainder 25% is with very few shareholders. Only around 4,800 shareholders have the remainder. So volumes are very, very, very low. Now, if you just take a look at the financials, first 9 months, well, nothing interesting or nothing exciting at all. Top line was as flat as can be. We had the margin stable at around that 32% or thereabouts. And the net profit number was at around 56 crores. But in the last quarter, given that we had demonetization, I wanted to see what kind of impact really was there on their media business, which is their core business. Now, the top line was as flat as can be, while the EBIT was up close to around 2%. For a quarter where you had demonetization playing out and a Gujarati newspaper gets bulk of their revenues coming in, advertising revenues from the real estate as well as jeweler space, that was quite encouraging. But what they've done in the last few years, top line growth of not even 10% on a CAGR basis, but the operating profit has improved. So it was at around 83 crores a couple of years back. In the last year, it was at around 126 crores. And the profit number as well has jumped up. If you take a look at the valuation matrix, last year they did a net profit of around 81 crores. And this year, as we speak, the market capitalization is roughly around 670 crores. So it's not even trading at around 10 times as we speak. The balance sheet, that's very, very strong. They have a cash of more than 250 crores, market capitalization of around 670 crores, telling you that, close to around 30-35% of their market cap could be equivalent to cash as well. And it's a zero debt company as well. That's something that caught my eye. But the utilization of cash hasn't been great. I had a word with the management. A few years back, they lent some money to a real estate company. That's a group real estate company. It's known as Applewoods. And now they lent close to around 200 crores. After some time, they went ahead and they converted that into equity. So they have 15% stake in that company. I mean, for a shareholder, you wouldn't be happy at all. So utilization of cash hasn't been great. What are the triggers going ahead though? Ramping up of the television business. That's point number one. Point number two is the Gujarat state elections will be due in the next 1 year or so. So that's going to be an important trigger. And finally, will Gujaratis continue reading the newspaper or is it going to be online? Nonetheless, a rather interesting company, Sandesh Limited. Back to you.
Well, the only Sandesh I knew of the paper, but the only Sandesh I liked up until now was the sweet that you get to eat in Bengal. But thanks so much for educating us on this.
So now, as you said that, I'm sure a lot of Sandeshas would have been saying which Sandesh that Sonia like. But it's good, it's the sweet. All right, back to you.
Okay, Nigel, thanks a lot for that. Standard disclaimer, of course. This is not a stock recommendation. And, as Nigel said, it's a very illiquid stock. Keep in mind. It's been a big wealth generator, of course, over the last many years. Quietly goes about its business. Even the owner and the editors of the of this paper, if you meet them, there's quite a bit of humility. Actually, Mr. Tulsan must be tracking this stock. It's a really very old stock. Mr. Tulsan, any thoughts on Sandesh?
See, Anuj, I have been keeping a positive view on this stock for last 10 years because the kind of financial solvency and the strength you see in the company. Nigel referred of that one, real estate company, though the clarity is not available on that space. But I think that any of the move, you don't doubt on the corporate actions of that, so that will also be accruing to the good profitability, and maybe one-off, because if you see 9 months performance, I am not disappointed with the 9 months financial performance, because overall the stock is looking very good for the long-term investors, because firstly it is thinly traded, so maybe the impact costs sometimes are seen very high, but otherwise those who want to have the stable stock like this, they can definitely go as a long-term investor only.
Okay, in fact, it's been one of the compounding stocks, 10 bagger over last 8 to 9 year period. But let's discuss one more name. Everready is in focus. The board has approved reorganization of their packet tea operations. Amritanshu Khaitan, MD, now joins us. Amritanshu, good afternoon. Since the board has authorized you to take the next action, can you tell us what's going through your mind? What all options do you have right now?
Good afternoon. The packet tea business has been there in the company for over last 10 years. It constitutes about 80 crores of turnover, and at EBITDA level it is a small negative. Now this business has been a distribution initiative of the company where we leverage the Everready network to sell the packet tea. But we have not been able to invest behind the branded packet tea business to really take it forward. Everready as an organization is concentrating on the lighting, electricals and appliance business to spur higher growth. And we believe that by moving packet tea into a 100% subsidiary, which is one option, we could look at leveraging it by even attracting some private equity or strategic investors. As you know, the group is the world's largest in tea plantations through McLeod Russell. And we do have a leverage of sourcing of tea from that company and the distribution here in Everready. So we have plans to scale this up, but it does require additional capital, which the standalone operation will not be able to provide. So the board has recommended us to spin it off into a 100% subsidiary as one option. And then we will take things forward from there.
So are you at the moment talking to any strategic investors, Amritanshu, and is there any fruition that we could see to any talks by the end of this calendar year itself?
I can't comment on what discussions we are having on the strategic part, but as I have mentioned in the past, packet tea is an inherent strength and something which we want to focus going forward at a group level. So we will see how we can reorganize this to really leverage the overall group strengths to grow packet tea. One must mention here, apart from Unilever and Tata Tea, there is no third national player in a 10,000 crore packet tea market. So I think there's a tremendous opportunity here for us to leverage the Everready distribution, which reaches about 1 million outlets directly. But it needs sustained brand investment of between 10 to 15 crores annually over the next 3-4 years. And that is the kind of investment we would be looking at through a strategic investor or a financial investor.
So would you at some point look to even sort of list this company if post the demerger? And are you going to, what kind of growth would you envisage from this 80 crore level that you spoke about?
See, at the moment the board has approved for us to evaluate various options. So whether it will be transferring the business or whether it would be a demerger, those things will all have to be evaluated. It's an in-principle approval which has been given. I personally believe that the turnover of packet tea, which is at about 80 crores, giving a volume of about 4 million kilograms, we would be focusing to move it to at least 10 to 12 million kilograms in the next 5 years.
Okay, Amritanshu, thanks a lot for your time today, and we'll talk, of course, when you do make a decision on this division. For now, the market is quite okay, actually. At the high point, 8865 is what we have on the Nifty. The mid-cap index is at new all-time high. The Bank Nifty, of course, is up about 1/3 of 1%. Things looking good, and the cash market volumes are very high. So let's do one thing. We'll take a break. We'll come back and get you some feedback from the dealing rooms. the stock of the moment actually is now HDFC Bank. That's the largest weighted stock, of course, in the index now, both in the Nifty and the Bank Nifty. On the Nifty, it's accounting for 1/3 of the gains now. Let's pull up, that's the intraday chart of HDFC Bank. Phenomenal move is what we are seeing for a large stock. 13-point contribution on the Nifty. On the Bank Nifty, actually, the entire gains are on account of HDFC Bank. Actually, more than that. The Bank Nifty gain is 88 points. HDFC Bank alone contributing 118 points. So, phenomenal move on that. Ashwini, your thoughts on HDFC Bank and also your BTST calls?
The HDFC Bank, now is showing its normal movement. So I would ignore the movement of Friday. So basically, I think it's hit all-time high, and above that, we could see another, say 200 points at about 1500, 1550.
Okay, and trades for tomorrow?
BTST wise, DHFL is a buy with a stop of 318, target of 334. OBC is a buy with a stop of 119, target of 130. And Delta Corporation is a buy with a stop of 122, target of 134.
Well, something is definitely happening in the power space as well. You have a lot of traction seen in these power finance companies, REC and PFC. Just intraday, if you look at the chart, both are at the high point right now. JSPL, we've been speaking about that all day. Adani Power is the other one that's been moving higher. Prakash, what are your thoughts on what one should be approaching in the last 15-20 minutes of trade?
I think for today and tomorrow, I think BTST is Aban offshore. That looks good. Target is around 240, stop below 232. Power Grid is a buy, can climb to levels closer to 220, stop below 205. And Vedanta, target is 285 and stop is 264.
Okay, so lots of buy calls. But let's do one thing. Let's get an insight into dealing room chatter then, because cash market volumes are very high today. Of course, you can't compare them to Friday because Friday was that big HDFC Bank day. But it looks certainly higher than the average of last few days. Nimesh, what's the feedback today? Quite a bit of buying in a lot of names today.
Oh, looks like Anuj. So clearly the feedback is the FI volumes are at least twice the normal volumes on a given day. Of course, we can't compare with the HDFC Bank of Friday, but largely that's been the feedback that this is backed by good amount of FI buying as well. And the sense I'm getting is now at least India seems to be back on the radar as far as the FI investors are concerned, especially the investors who look to chase momentum in the emerging market. So India seems to be at the top end of that momentum chasers, at least for the time being. So that's a clear feedback that today's rally is backed by some bit of FI buying as well. Domestic are pretty quiet, but within that, I believe there is a lot of action coming in from the treasury guys. The treasury investor seems to be pretty active of late in the mid cap and small cap, and that's the case in today's trade as well. And remember, most of the domestic funds are now sitting on cash plus the fact that they've raised 5,000 crores by selling stake in HDFC Bank on Friday. So the domestics is filled with money, and that's going to go into mid cap and small cap in days to come. So that's where the momentum seems to be. The one space which is buzzing in trade today and it's actually surprised a lot of dealers is the mid cap banking space. Not sure what the buzz is, but there is a lot of action now from the retail desk and the HNI desk in the mid cap bank stocks, so to speak. So that's the space to be in, at least in the near term. The other big feedback is the mid cap index seems to be breaking out now. That would probably mean that it could be a very sharp, swift 5 to 7% rally in the mid cap index if indeed this is a technical breakout. So that's something which has been talked about in the dealing desk. But clearly today's move is backed by FI buying, and the big takeaway is it looks like the mid cap index is breaking out, which will probably mean big surge in the mid cap and small cap stocks even from here on.
Okay, thanks a lot for that, Nimesh. Anisha is with us to tell us about those very stocks that have been buzzing over the last couple of hours. Anisha, what's on your list?
Well, yes, I'll start with some new names that Varinda has called out for us. So CMI FP is up 20%. Other names like Parnix Lab, TNI Global, Ideal Optics are also trading 10 to 12% higher. Ankush Finstocks is another new stock on the radar, up about 7% today. Some other names include the like of Golson Stone, which is up about 7%. And these pharmaceuticals names like Panisha Bio and Marks & Pharma are trading 20% higher. Some other names include Dharni Sugar, Responsive Industries, Sika Interplant, among dairies, which are trading anywhere between 10 to 16% higher. Panam Cement is another stock that has been buzzing for a while. Other commodity names include the like of Barasor Alloys, Bini, Visa Steel, etc. Ramki Infrastructure, Lambodra Textile, Murdeshwar Ceramics are some other stocks to look at. In terms of other space, we have packaged food business that is doing well. So Lotus Chocolates is up about 8%, and Samprin Nutrition is another new stock on the radar, up about 8%. In terms of the mid-cap space, as you all have been talking about, mid-cap banking is seeing some action today. So DCB Bank, Karnataka Bank are soaring and surging in trade today. Merck, Delta Corp are some other names. GMR Infrastructure, after exclusive story, is buzzing in trade, and some commodity names like Maharashtra Seamless, Bhushan Steel and Grace Cotton are clearly seeing some action.
Okay, Anisha, thanks a lot for that. Well, before we go to Rima for TCS, Mr. Tulsian, just one thought from you on the space that's buzzing now, the likes of REC, PFC, PTC, all these stocks surging. What would be your top pick among all of these?
See, Anuj, actually, if you see amongst the finance space, probably this REC and PFC, both were not moving up. In fact, I gave a buy call on PTC India in the maybe a couple of weeks back on the channel, saying that if you take the exchange, power exchange business, the kind of growth which we are going to see, in fact, the power consumption is going to get improved. So obviously, this kind of re-rating reflection has to be seen into the PFC, REC as well. That is what is seen coming in today. So I am keeping a positive view, because from here on, if you have the improvement if you have the T&D infrastructure in place, and with the Discom health, seen having improved because of the Uday bonds and all that, maybe from the next financial year, the power offtake will be seen quite high. We are seeing the summer season now approaching, and that will be seen a very big trigger for all these power generator companies, and because of that, we have a positive reflection seen on PTC India, PFC and REC.
Okay, well, those are some of the power finance companies. Today, all the Tata Group stocks are up and about. So you have Tata Steel, Tata Motors, TCS and all the smaller Tata Group stocks as well. We do know that N. Chandra will be walking into that corner room in Tata on Tuesday, that's tomorrow. But ahead of that, TCS is also on the radar today. The board will be meeting to discuss the share buyback plans. Rima has more details on what you can expect. Rima, you told us earlier in the day that, if there is a buyback in addition to the dividend, then that's something that the street will really like. But tell us about the numbers.
Well, the company can do about a $3 billion buyback if they choose to do 25% of its total paid up capital and the free reserves. They can do even a 10% without seeking a shareholder approval. That makes the buyback just about $1.2 billion. The total cash in the company's books is in excess of 43,000 crore rupees. So that's about $6.3 billion. So the headroom available for the company is quite high. They can go up to $3 billion as well. Promoters will participate. Promoter shareholding stands at 73.3%. If they don't participate, then the promoter shareholding crosses at 75% mark. But I think the thing the street will watch now is how much of it is probably in the price. The stock has moved up nearly 10% since the start of the month. So a good chunk of this expectation of return of cash to the shareholders is probably in the price as well. And with respect to the question about buyback and dividend, now the company last year paid a total dividend of 43.5 rupees per share. Now that roughly turns out to be 10,000 crore rupees if you include the dividend tax that they had to pay. So so now the street expectation is that the company will do a buyback of say 15,000 crore rupees roughly. The dividend component comes down, but it will not be zero. So net the amount of cash that the shareholders get this time is going to be much higher than what we've seen. So there is going to be a bonanza for shareholders. That is what the market is expecting, which is why the stock has moved up so much. We won't get clarity on how much dividend they'll pay eventually through the course of the year. But now the number to focus on is that how much is the total quantum of buyback, and right now the street is working with 15,000 crore of a total buyback of their total cash pile of 43,000 crore rupees. But my sense is a good portion of it is already in the price. And yes, as you rightly pointed out, one of India's most successful IT CEOs is giving a last parting gift to his shareholders. That's N. Chandra. So last day as he presides over the board of TCS CEO, and he's going to sign off by giving a buyback to the shareholders. Back to you.
Oh yes, and what is he going to get? A lot of uncertainties amongst all the group companies is what he's going to have as he enters into that corner room at Bombay House tomorrow. But well, thanks Rima for that. TCS ahead of that buyback is up almost about 2%. Let's take a short break on that note. As we do that, let's get some opinion from S. Naren of ICICI Prudential AMC, who has been bullish on the telecom sector. He was the first to tell us that telecom is a contrarian buy, and since then that stock, that space has zoomed. He says it's still very attractive from a 3-year perspective. Listen in.
If you're looking at the short run, it would depend on how different players in telecom actually act in the next month or two in terms of merger, in terms of tariff plans, etc. But if I take a 3-year view, I think Indian telecom market caps are very, very reasonable compared to the world. If I look at the next 3 to 4 years, I think the outlook for the sector looks very good because of very, very low valuations. I think this big fillip given to financial savings and continuing to keep fixed income attractive in the last 3 months is pretty positive for both debt and equity. Having said that, clearly if you look at equity upsides over a 2-year period, they can be much higher than that of debt, primarily because if you look at the last 2 years, particularly large caps haven't done much. So the outlook for the next 2 years for equity appears to be better than the outlook for the next 2 years in debt.
Okay, TCS buyback is here, so let's just wait for some more clarification because the stock all of a sudden has seen a bit of an intraday surge. The press release should open. Okay, I have the press release. 2,850 rupees per share is where the buyback is for amount not exceeding 16,000 crores. So that 2,850 crores, it's 2.85% of the total paid up equity. So actually, you know what, I tell you something, 2.85%, this 2850 may look quite interesting, but acceptance ratio will come down to pretty much nothing because it's 2.85% of the overall capital. 16,000 crores is the total buyback that we have at this point in time, and the market is reacting because that's up to 5.6 crores equity shares for up to rupees 16,000 crores. It's a tender offer route, of course, not the market buyback, which is that the company will be buying at a fixed price of 2,850 rupees per share. But keep in mind, if you buy it today and you sell it and you want to tender it in open offer or in the buyback, not all shares will be accepted. So that's something that you have to keep in mind. But the stock should come off the highs, but at this point in time, still up about 3%, Sonia.
Yeah, all the details that you said, the buyback price has been set at 2850 rupees at this point in time, 5.6 crore equity and up to 16,000 crores is the total size of the buyback. The stock is reacting on the upside now, 3% higher. Let me quickly go across to Mr. Tulsian. Mr. Tulsian, any quick thoughts on this? These are the key numbers that have come in. The price has been set at 2850 rupees a share.
See, Sonia, two things. Firstly, it's a tender offer, and I'm presuming that promoters will also be indicating that they will tender the shares in the open offer. But what it is not compulsory on the part of the promoter. So maybe eventually they will look to increase their stake from 73.33% to 75% if this offer goes through and they don't participate in this offer. Number one. Number two, maybe near term. I'm not taking a near term call, but these kind of buybacks, tiny buybacks of maybe 3% has never worked in any of the company. Whether you take the case of Bharti Infratel, Wipro, there have been umpteen number of examples, which we have seen in this case. Because nowadays this, I think so. I'm not very sure about the rules. Maybe an investment banker can throw the light. This open offer is not allowed by the SEBI. It has to be all tender route, and these things doesn't work because even if you take the maybe about 1/3 of the money having used for this buyback, market will not be very cheerful. I'm not going for the intraday moves, but ultimately this will not be seen as a value creation. But as I said, that maybe this could see promoters increasing their stake in the company to 75%.
Okay, Pradima, you want to add something that you have noted?
Well, for one, at 16,000 crore, it's largely in line with the market expectations. We're working with a figure of 15,000 crore in terms of the market expectations. At 2850, it is a premium of 15% to where the stock is currently quoting at, and it's already seen an 9 to 10% up move. Also, with respect to the point of about only 5.6 crore shares or 2.8% of the equity, if you just purely go by the rules and if you want to do a tender buyback at a price which is at a significant premium, the company could have at best done about 7 crore roughly. That would make it 3.5% of the outstanding equity. So going by the rules, the rules that you have for buyback, the headwind available for doing a buyback, which is significant portion of the outstanding equity, was not available to TCS. So that's the other point that I'd like to make. But I would say largely it's a good number, 16,000. We were working with 15,000 crore, and it's at a 15% premium to where the stock is quoting at.
Okay, so stock is up 4%. Let's throw it to a couple of more analysts. Deepan Mehta joins us. And we have Karan Turani also now joining us. Good afternoon to both of you. Deepan, what would you say? 4% uptick right now. good exit opportunity? You are bearish, of course, on the large cap IT, or do you think you'll change your mind?
No, you said it. I think it's a great exit opportunity. And my view is that investors shouldn't go for offering him the buyback and take advantage of this price hike and gradually sell from now till the last day the buyback is available and look at exiting out of TCS once and for all. Buybacks are done when companies become extremely mature and growth rates slow down. They don't have any active use for the money. And this is clearly what is happening in TCS and IT sector. I think investors should now look at moving on. They've been huge wealth creators and a lot of very high portion of portfolio investor portfolios in TCS and other IT companies. But this is a great opportunity to look at exiting.
Dipan, you were so cautious on this space that we knew exactly what you were going to say. Karan Taurani also joins in. He tracks the space closely as well. Karan, the stock now is up 5.5% TCS, so it's gaining more ground. You think the news is in the price, or would you expect more?
I guess the news is largely in the price. Valuations now seem to have almost peaked out for TCS, given the growth rates have now become muted in the high single-digit range. You could see these kind of buyback activities coming in again in the next 18 to 20 months because of huge cash pile accumulation by large IT vendors.
Karan, 16,000 crore by way of a buyback. Do you think that the company will keep up with the 10,000 crore of dividend that they paid last year? Or will the dividend component come down this year, according to you? And what should be the numbers we'll work with?
So basically, dividend component has anyways been lower, and dividend component should increase in the range of 40 to 50% in terms of the payout ratios, and that's been primarily low. So since there are no targets for any acquisitions, and we don't see acquisitions, the big billion-dollar acquisitions coming in for the Indian IT services vendors, so most of the cash should be given away in the way of buyback or in the way of dividends.
So this buyback is not in lieu of dividend in any way, not even in a small partial way. This will be over and above that.
Yes.
Okay.
Right now, of course, the stock is euphoric because the price itself is set at 28.50. So, it's just rocketed up 5.5% now.
Oh, yes. Will be interesting to see what happens tomorrow morning, of course, because you could have a bit of a culmination even now. But Deepan and Karan, thanks a lot for joining us with your quick take.
Anuj, what this also does would perhaps put a little more pressure on some of the other companies like Infosys, etc. I mean, just pull up the intraday chart of Infosys as well. That's the next one that the street is pinning their hopes on. And I think in the last 2 minutes, that one spiked up as well.
That's rallied a bit. But Sonia, my sense is, if you're buying TCS today because the buyback price looks attractive to you, you could be making a bit of a mistake because it's the acceptance ratio would be next to nothing, and yes, the price does look good, but you'll have to average it out and see that whether the rest of the shares will still command the kind of value that you're paying right now. But Ashwini, technically, would you be using this uptick to sell into, or do you have a different call on TCS?
Well, it's never a good idea to buy post news, but it hasn't reacted too badly to this sort of news and has held its 200 DMA at around 2400. So maybe a slow move towards 2650, 2700 seems possible. Had the buyback been negative, it should have closed down. So now that it's closing higher and with a 4.5% style gain, chances are the market is not taking it too poorly, and maybe you could have a further rally towards 2650.
Okay, Neeraj Diwan also joins in to participate in this discussion. Neeraj, now this story has played out. The TCS buyback has come and gone. The next story everyone's latching on to is the possibility of Infosys doing the same. That stock has moved up quite a bit. But how have you read into all of this news flow? And as a long-term retail investor, what should one do here?
I think as far as TCS is concerned, this is a good opportunity for investors. I would agree with most of the analysts which they have said on TV right now that this opportunity can be used to slowly liquidate if you have your exposure on TCS. And I think Infosys, if you see from that angle, I think still has upside potential, and I think there the news can still play on because there is still expectation of some announcement there. So I think if one were to shift from TCS to Infosys, I think it will still be a good idea, and one has to do it gradually, because I feel the premium that they've announced on the buyback of TCS is slightly better than what market was expecting. So that's a premium is good. That's why I think we've seen the kind of reaction in the market. But the amount is slightly over that amount which market was expecting. So that will play off in the next couple of days. So I think shifting to Infosys should be a good idea.
Okay, just to make take home the point that I'm mentioning, if the promoters do participate, which is likely, in that case your acceptance ratio is only 3%. So
yeah.
suppose you buy 100 shares right now, Sonia, of TCS at 25.12, 3 shares out of that will get accepted and get you 28.50, but 97 shares then will again come back to you, and you'll have the market price. So you'll start to lose money as soon as TCS, if you're buying right now, they say even below 2500. Forget about anything lower than that. Just a 12 rupee loss in TCS share from here on, if you're buying right now, would mean that you'll actually end up losing if you're buying only for buyback. If the promoters don't participate, even then the acceptance ratio is only 10%. So and the stock has already rallied a lot. So if you're buying right now, your call has to be that not just has the stock put a floor, but there's genuine reason to buy the stock. There's no arbitrage available now if you're buying now, because acceptance ratio would mean that you have practically nothing.
Okay, fair point. We're closing the day for the markets now, just about 5 more seconds left. It's been a really good day of trade. You know what, give and take everything, the market rallied 0.7%, the mid-cap index is up more than 1%, and all the good work that we put in over the last couple of weeks has seen some further traction on the upside today. So Anuj, after the entire day, whether it was TCS participating, Infosys, HDFC Bank, put together, a lot of heavyweights took the market higher.
Yeah, and once again reiterates the theory that the market's been taking 1 step back, 2 steps forward. Maybe this time it took 2 steps back and has taken 4 steps forward now. That's how it panned out. Top gainer was TCS, of course, up 4%, Infosys as well, up 3%. But apart from that, you had other big gainers like HDFC Bank that really contributed 2.5% higher on that. GAIL, BPCL, Idea Cellular, Asian Paints, Maruti Suzuki, all of them were up and about in trade. The only notable loser was Axis Bank, down 2%, but as Sonia mentioned, big gains in the mid-cap index, and a lot of good quality names were gaining today.
Yes, they were. The mid-cap index closed with gains of more than 1%. The market breadth was very strong today, more than 1,000 stocks on the advancing side. One of the stocks of the day was Marks & Pharma. We seldom talk about that, but today the company got an approval from the UK MHRA for its Goa unit, and all clear basically, and that stock surged 20%. The space to be in today was the mid-cap private sector banks, so the mid-cap banks in general, private sector particularly. So DCB Bank up about 10.5%, Karnataka Bank up about 6%, Federal Bank up 3%, South Indian Bank up 3%. So that really was the space to be in on the trading end. Punj Lloyd gained about 10% on the back of an order win. The volumes were very high over there. Sugar stocks continue to do well, Bajaj, Hindustan, etc. And power finance companies like PFC, REC, etc. were the big pocket of strength in trade this afternoon. That's the list of gainers. On the losing end, you had Havels, because there is concern about margin dilution post taking over the Lloyd's air conditioner business, which has slightly lower margins. Lloyd Electrical was down about 16.5%. Manappuram Finance came in for some profit taking as well. But as we wind down trade, the market has moved to higher levels. The Sensex is now within kissing distance of that 29,000 mark, and the Nifty is just less than 200 points away from that 9,000 mark. But let's get some final comments from our guest then. Ashwini, what's the call on the index that you would take tomorrow, considering that we had a pretty good run today and there was participation from all verticals, whether it was banks, IT, most of the heavyweights?
Well, now you can say that 88.20 has been crossed, and now it's 100 points away from previous highs. So at some point those should be crossed, because once the Bank Nifty is clearly maintaining above its previous highs, then it becomes only a matter of time before the Nifty also does that.
Okay, Neeraj, we've discussed IT. I want your thoughts on private banks, especially HDFC Bank, after the kind of move that we saw on Friday and today. What's your take on that?
Yeah, actually the move today was very surprising after the move we saw in the last trading session. But I think upside in HDFC Bank post this move that we've seen would be limited, though it can definitely, after making a high, can go on for another 5-10%. But I think there is a lot more money which can be made in smaller private sector banks. Like we saw a good move in the South-based banks today. I think valuation-wise there can be a lot of catching up happening there. So I think I would rather at these levels buy those rather than buying HDFC Bank after this good move that we've already seen.
Okay, well, let's wind down the day's trading action on that note. Thanks, guys, for joining us and taking us through the last 1 hour. It's been a very strong day for the bulls. The cash market volumes are also high today, almost 20,000 crores. So let's see what kind of moves we get from the FIIs and the DIIs tomorrow. The volumes were on the higher side and the traction was on the upside. That's always a good combination. Take a break on that note, but when we come back, we will get you very interesting slices of an uncut and candid conversation with the top boss at Britannia, Varun Berry, from our special series, the CNBC TV 18 Weekender. Stay tuned.